stuff. And so, yes, so we're ready to rock and roll. So this is part 3. This is part 3 of our Breaking Down Trash Value Life Insurance series. And I'm bringing it to you tonight. I've been teasing you guys for the past few weeks, but the day is finally here. And man, our featured speaker for tonight is our regional sales manager. Her name is Xochi Lopez. She covers Louisiana, Texas, and New Mexico. It's the Southwest Territory. I had an opportunity to sit down with her over Zoom on Friday of last week and just really kind of get to know her and all that good stuff. Let me tell you a little bit about her background, right? So first of all, she's a ball of energy. She has a great personality. She has a passion for what we do, and she has a love for this company, right? She's been in the financial services industry for over 12 years. She was originally licensed when she was in college, right? And so was a part-time receptionist for a large insurance firm. And then what she did, she went on to have a career as a wholesaler in the annuities department of AIG. And that's where she became securities licensed. And when she was with AIG, she learned about an opportunity to come directly on board with Primerica. And she just loved the Primerica culture and our philosophy and the things that we stood for and the energy that we brought to the table as a financial services sales force, right? And so she jumped at that opportunity. And when she was at AIG, she worked alongside of Primerica. You know, she was a wholesaler with them. She trained reps. She helped process pending business. And she was part of that home office team. And so I'm telling you right now, she's been on board with us for a little bit over a year. She couldn't be happier in her role. And she's bilingual. She speaks English and Spanish. And like I said, she covers Texas, New Mexico, and Louisiana. And she told me some things that she does as a regional sales manager that I was like, I didn't even know. Right. We got all these tools in our bag and all these resources available to us. She's going to share a little bit about those tonight, but mainly what she's going to do, she's going to talk about index universal life and just that trash value stuff that's out there. So without further ado, I need everybody to come off mute. You're already clapping. You're already cheering. I need you to come off mute. You're already clapping. You're already cheering. You're already clapping. You're already cheering. Northwest Territory. Xochi Lopez.
I need you to come on and do all my intros with me every single time. That was amazing. No, you guys, I mean, you even motivated me to use my standing desk this evening. Usually by this time in the day, I'm like, I'm just going to sit down with my blanket on my lap because I'm usually about 6 to 8 trainings in, you guys, but you got me pumped up all over again. You guys, good evening. You know, like Nick said, I am your regional sales manager here at Primerica on the life insurance side of the business, right? So a lot of you guys may already be familiar with a lot of your counterparts and resources here at Primerica. And so tonight, I'm just going to kind of introduce myself first and foremost, tell you guys a little bit about how my role can help you. I more so serve the RVPs, right? So anytime that you have anything come up that I talk about tonight, reach out in line of leadership, right? Let your upline know, reach out and get it to me, right? I'll be able to essentially manage the territory in the sense of making sure that something happens, right? Whether it's an issue, whether you're trying to figure out information. I just had somebody call me on my way back from running to Verizon because my work cell phone got disconnected, Nick. That's why I called you from my personal phone. I was like, okay, they deactivated my phone. I spent 2 hours at Verizon. It was a whole mess, but we're here and we are excited, you guys. So I'm going to talk through that, like I said, this evening. And then of course, we're going to get an opportunity to just sit down together and talk about trash value insurance. We always joke, you know, and say trash value, but you guys really, I'm going to give you a different insight or outlook essentially on how these products work. You know, every time that I talk about it, I disclose because I've been in the industry for so long. I know you have to disclose everything, especially when you're making financial advice, right? But I can't say it's never, ever, ever going to fit one of your clients, right? It may essentially be a solution for someone if they're super high net worth and they're looking for, you know, a little bit of a tax deferred growth on a lot of money. Okay, maybe, right? But we know know, working with Main Street or middle market America, that there is still a higher percentage of clients who don't necessarily fall in that high net worth category just yet, right? We know that, I think the other day somebody threw out an average to me, a statistic. I haven't even looked it up to make 100% for sure, but it was one of the leaders on a call. And they specifically said that males in the US, I think it's like 11% that are making over 100,000, you know? And so that makes you realize, like, we're still living in a Main Street or middle market world at this point. And so although that is the case, you guys, you'll see that I talk about statistics, I throw out the facts. My trainings are usually very different. I'm very much of an S personality type. So you'll see that I throw out statistics and numbers, but regarding specifically clients in Main Street America, this solution is not necessarily always going to be the best solution for them. And although we know that and we're out there teaching it, for some reason in 2021, there were 10.1 million life insurance policies sold, you guys. And I always hate to throw out the negative, but the reason I do it is because I want to remind you again as to why you're here, right? We talk about the crusade, we talk about doing what's right for our clients, but don't be afraid to have that awkward conversation. Don't be afraid to put yourself in a conversation that may be uncomfortable because you're coming up and talking to someone about a policy that they've been paying, you know, $300 for 10 years on, right? And so my goal tonight is to give you a little bit of confidence, right, in the sense of how to approach these clients and have a conversation and walk them through what they currently have so you can bring them to the light and show them the solution that we offer here at Primerica with our buy term and invest a difference solution. Okay, so that's what we're going to talk through tonight. Let me make sure I can share my screen here. Perfect. So typically what I do, you guys, I'll share my whole entire desktop and we're just going to kind of talk through. You'll notice that I look this way and I look this way because I have you guys on one screen and my presentation on another. Okay, so I like to look at your beautiful faces. So thank you everyone for having your cameras on tonight. I really appreciate that. You don't know what that means to a presenter, somebody who's on a camera all day long, right? This is awesome to see all these wonderful faces. So you guys, I'll open up for questions at the end since there's 40 of us on the call this evening. I'll open up for questions at the end. We'll give about 10-15 minutes for questions, but please, if you have a question, put it in the chat. That way you don't forget to ask me. I always say, right, these trainings, these nights that we get together, this is essentially your science lab, right? This is where you can come in and blow things up, ask me all the questions. There's no such thing as a dumb question, okay? That's literally what I am here for. I'm here to help provide you guys the resources. And if I don't know the answer to a question, which happens, you guys, it happens to the best of us, especially in this industry, there's always some question that a client comes up with that you're just like, I've never been asked this before, right? But please ask me, put it in the chat, send me a text message. On the next screen, you'll see that I have my contact info. I updated it to my personal line tonight, which honestly, it doesn't matter. I have two cell phones. I have a personal and a Primerica cell, but please save it, text me, email me anytime you guys need anything. I'm going to kind of talk through how I can help and how I assist the base shop, right? But as you see on the screen, my name is Xochi Lopez, right? I know it looks exactly like it's pronounced, right? But like Nick said, I am bilingual. I do speak English and Spanish. So if you ever have any reps or anyone that joins the team that you're looking for additional resources when it comes to training for, just let me know. You guys, as we grow, as we expand, we're adding more resource and more stuff to POL when it comes to Spanish, of course, French as well for our Canadian partners. So just don't hesitate to ask me. If they ask you, you know, that they want additional information or videos or trainings and stuff in Spanish, those are all things that I can provide, okay? And so I want to make sure that you guys know that. But we're going to talk through essentially what my mission is as your regional sales manager. And so as a regional sales manager, my mission, right, is to assist and support the growth of the base shop. So there's a lot of different ways that we can do that together, right? And I'm going to show you a couple trainings and a couple different ways on the next screen. But really, just like Nick said, right, he couldn't have said it perfect for me, speaking for me, right, in the sense of why I made the transition to Primerica. My goal in this job is to make sure that our mission is clear as a company. It's not just, you know, assisting and supporting the growth of your base shop and our compensation and how much money we're making, you know, and all that, but it's really relaying that message, that mission that Primerica stands for. You know, our mission as a company is not only to provide, you know, a record number of clients with a record amount of coverage, but it's also to make sure that our clients are properly protected, number one, right, by properly analyzing the amount of coverage or the type of coverage opportunity, or at least a solution to become debt free, right? We teach our clients debt stacking. We teach them the rule of 72, right? And overall, teaching them how to become financially or insurance independent, however it best relates to you, right? My goal is to make sure that that message is clear. And so my trainings, like I said, they're going to be more mechanics, right? Understanding how the product works, running through overcoming objections. I mean, there's a bunch of different topics that you'll see on the next screen here in just a minute, but I just want to touch a little bit on what's coming up here at Primerica. I'm sure you started to hear, that we are going to be launching a new product this year. So I definitely want you guys to be in the know of that, but also don't let it take over your mind, right? You're going to start hearing, oh, well, it can provide this, it can do this, it can probably be a better price for my client. Yes, you guys, we are going to be rolling out a new product, and yes, it's going to be an amazing solution. Yes, we are reducing our premiums for our future clients. Those are all huge things, but you have to remember, you're still in the now, right? We want to make sure that we catch that eligibility for every single one of our clients. And although we want to be able to provide them the best possible price that we can, clients have no idea that we're going to be launching a new product in the next few months. Okay. They have no idea. And you get the opportunity, right, over the next couple of months to insure everyone, and everyone that you've insured since January 1st of 2022 is going to have the opportunity to transition into the new product. Okay. So get them insured, get that eligibility locked in. The worst thing that we can do in our industry is teach someone about our product and what it can do for them, and let them walk out the door without coverage and something, God forbid, happen, right? That's the worst possible thing. So you continue to do what you do. Just remember, right, the direction that we're moving in as a company is essentially increasing our technological advances on our application, making it a better, a more easy flow, not only in the actual application process itself, but how our contract is worded. We've completely reworded everything on our contracts themselves. As opposed to having paragraphs, now it's like sentences. It may sound silly, you guys, but it's going to make it, again, a much more simpler product for clients to understand and be able to read through, unlike the products that we're going to talk about tonight. And I'm going to actually show you guys examples of IULs. Nick, I only have that one that I told you with the client's information blanked out, so I'm going to show that one tonight. But I do have like 4 more that were sent to me. I just have to find the time to literally sit down and block out every single policy number and client name. So you got to give me a little bit of time on that. But if you guys have policies that your clients do send to you, or that they bring to you, that you want to run by me, that you just need a little bit of assistance on, don't hesitate to call me, you guys. We're not going to sit there and go through every single page. That's one thing that you're going to learn from me tonight. I don't need you to be able to sell me an IUL, right? I want you to be able to grab an IUL and confidently turn to the pages and point out certain things to your client that they may not necessarily know about, okay? And so that's what we're going to focus on tonight. But just remember, right now is the best time for your clients to buy insurance at Primerica. This is the best opportunity they're going to have, because number one, they get to select between what they are offered right now and or switch over if the other solution is a better price for them. Okay. And so one of the things that I'd love to show you guys before we transition into talking about IULs, because I've thrown out a negative statistic, right? I said in 2021, right? In 2021, not 2020. In 2021, there were 10.1 million life insurance policies sold. Out of those 10.1 million policies, 6.1 million of them were whole life, and 4 million of them were term insurance. And so somehow clients are still being sold the wrong type of insurance, because like I said, we know that a majority of clients do not fall within that high net worth classification. And so what they're being sold and told that their policy is going to do is never the case. And I don't even want to say a percentage, like, oh, maybe it works out certain times. No, you guys, we look at these policies. We have RVPs that transitioned over into our company because they had policies that were lapsing because they weren't paying enough in premium, right? But we're going to talk about how that looks and how you're able to point that out to your client so that doesn't happen to them, right? Where they're paying on a policy for 10, 15 years, and then it doesn't even do what they were sold it was going to do, right? Whether it's provide them a cash value or provide them a death benefit. And again, it sounds silly, right? How could they not provide a client a death benefit if that client bought life insurance? And you're going to see exactly how everything cancels each other out. But in 2020, I want you to keep in mind, you have to remember our market share and our opportunity and what we stand for. In 2020, we ranked number 2 in top 10 ordinary life insurance companies. That doesn't exclude anyone, right? So you see on the screen, Northwestern Mutual, State Farm, New York Life, all these huge names. Primerica ranked number 2 in the amount of coverage that we provided to our clients. Yes, I would love to say we ranked number 2 in compensation or number 2 in the amount of clients that we insured. But this means even more to me, that we were able to provide this amount of coverage to our clients because we understand what we're here to do. We know that we have to analyze every single situation. And because we are given the opportunity to run a portfolio for every single one of our clients, we understand that we want to make sure they're completely covered, right? We're not going to play a part in that $25 trillion life insurance gap that there currently is in the US. $25 trillion life insurance gap. That means that every single family that has life insurance right now in the US is underinsured by about $500,000. And the fact that we are making a difference in such a small playing field compared to these huge companies. I mean, Northwestern Mutual, you guys, they've been in business for 110 years longer than Primerica. 110 years. And the fact that we ranked right below them, I mean, that to me, that is mind blowing, right? That's why I'm so passionate about this company and what we stand for. And so my role, again, I'm here specifically to provide base shop trainings, kind of like I'm doing tonight. Also life app support, right? Making sure that you understand not only how to run through a life application, but also everything that takes to track your life applications, right? Our goal is to make sure that an application turns into a policy, right? So I want to make sure you know everything that you need to get from point A to point B, C, D, right? Because sometimes it's not as simple as getting to point B, right, Nick? Sometimes there's a couple things regarding underwriting or information that comes up on the client, right, that we have to research and kind of do a little bit of extra work for. So this is essentially how I can assist. On this screen, these are all the different training topics that I have already set up. In addition to this, there's like another 20 different topics that I've been requested by RVPs to run through and kind of do presentations on. So take a screenshot, right? Let your upline, your RVP know if there's a particular topic that you're interested in learning a little bit more about, and we'll come together and create a game plan, whether it's individual trainings or breakout sessions or whatever it is, to make sure that everyone's caught up. And again, I want you to feel confident, right? It's all about the confidence and having that credibility with your clients. Okay, so take a screenshot picture, whatever it is, and share it with anyone, especially people that you bring on the team. We're going to try to stay ahead of it. Right now that Nick and I have touched bases, he knows how I am here to support you guys, right? But please take advantage of it right now while we still live in this COVID world where I'm still able to be on Zoom, not like 80% of the time, because once I get out in the field 100%, it's going to be totally different, right? I serve about 700 RVPs. So I don't know, they're going to have like 10 of me, right, to be able to cover the whole territory. But definitely, you guys, please keep this in mind as you start getting your career started here at Primerica. Okay, just want to make sure you know how I'm here to support you. Okay, and so there's a couple things before I get into the training that I just want to. It's more so what's the word everybody says? It's like I forget the term, but housekeeping, right? When it comes to different things you have access to on POL, right? So I've talked about myself, even though Nick talked about me for a little bit, I just kind of told you guys how I can help. So just remember, if you think life insurance and you're not sure who to call, just call me, right? If it's not me that's going to help you through, it's going to be somebody else that I can refer you to, okay? But on POL, we are going to be launching a new life insurance page on POL on October 3rd. The landing page is still going to be the same, so you're still going to be able to access it the same. So anytime you need anything regarding the life insurance business, you guys, please refer to POL. On POL, you'll see over here on the right-hand side, it says products and then life insurance, okay? Once you get on that tab, play around with all the different tabs. It's a whole different training. It's actually a 2-part training for me to go through POL with you entirely. But I just want to point you out to one of the most important resources that you're going to need in your career at Primerica, and that is your life operations guide. This is like your life insurance Bible. Okay, so save it to your computer, save it to your phone, your iPad, whatever it is that you utilize. This document is going to walk you through how to process pretty much anything, all the way from new business through claims. Okay, so an extremely helpful tool. Again, I'm an S personality, almost a T sometimes, right? Although I hate to sit down and read through a prospectus because I had to do that for about 4 years of my career, I 100% suggest that you at least skim through the life operations guide. It sounds silly, you guys, but skim through it. That way, when you have a situation come up, you know, okay, I can look for this information on the life ops guide because I know I read through somewhere where it had information as to what form I need to make this change, or to, you know, what information I need to submit to make sure that my client is eligible for coverage. Okay, so I want to make sure you guys know where to find that information. Other than that, there's one more thing that I want to point you out to, and I'm going to skip a couple pages because this is my new rep training. So this is like a full-blown training deck, but this screen right here, if you are either newly licensed, okay, so you just recently got licensed, you're not familiar yet with POL or Life Manager, or if you just want a refresher course on understanding everything that you have access to regarding QBI, right, tracking your business, making sure that you track and retain your clients, on POL, there is a Life Office Manager certification. If you take a screenshot right at the bottom, it tells you how to access it, okay? So POL on-demand training and development, and they have it in Spanish already. So it's not coming soon anymore. It's already available. And this is a 4-module training that takes less than 1 hour. It doesn't even take a full hour, okay? And it walks you through the 4 stages of owning your business in the sense of, number 1, understanding how POL works and all the resources you have access to, how to read through Life Manager, how to find issues in QBI, and how to retain your clients in the sense of life conservation report, your end of term conversion report, child rider report. Again, this may be new information to some of you. Some of you are probably like, what? I'm not there yet, right? You're barely learning, right? But if not, if you've heard of these terms and you're not necessarily 100% comfortable, check out this certification. It has a workbook. Make sure you find the workbook first so it can guide you through the training. Without the workbook, it's kind of hard to stay focused. The workbook's going to ask you questions just to make sure that you maintain the questions. Now, if you want to sit with me afterwards to review the information, please, you guys, again, reach out to me, right? I'm here. I'm a resource. I may not be able to do a one-on-one, but we can get a group together and we can all sit there and run through the information just to make sure you know exactly how to track your business, right? That's my goal. My goal is making sure that you are successful and that what you're doing is working for you. If not, we'll come up with a new system, right? A different way to track your business that works for you. Okay, so those are a few things I wanted to show you before I got into my training, right? So I've kind of talked through essentially what I do, how I'm here to support you guys and support the growth of the Bay Shop, right? You know essentially what my contact information is. If not, of course, Nick has it, right? So feel free to send that to the entire team. If you text that number right now, it'll work. The number that you have on that picture, but you can't call me. I have to wait to go to Apple tomorrow to figure out what happened. But you guys, let's go ahead and dig in. You know, we're going to talk specifically regarding IULs tonight. And I'm throwing out a whole bunch of information to you, right? I've already given you a bunch of information. I don't want you to feel overwhelmed, especially if you're newly licensed. I don't know what the, calibration is here in the sense of newly licensed or how long some of you have been here, but please bear with me. I promise I'm going to try to make it as simple as possible. But if you take anything away from tonight, number 1, it's where to find your resources on POL, right? You have somewhere on POL now that you can go to. You have that Life Office Manager certification. I would start there, right? Get yourself knowledgeable about your tools and everything you have access to, right? There's a reason why you pay an extra premium to have access to this entire, resource or this entire database that was created just for you, right? But we'll go ahead and lean into our universal or index universal training tonight. And it's labeled Universal Life and Index Universal Life because an Index Universal Life is technically a universal life with just a different cash component, right? So So I don't want you to feel overwhelmed, like, oh my gosh, this is a whole different product. You don't need to be the product expert for this product, okay? You need to be the product expert for Primerica. You just have to know how to overcome the objections and be able to point it out to your client and then not think, oh, you're just saying that because you work for Primerica. You want me to buy life insurance with you. No. Right. And you guys, you'll see it. If you haven't already seen a life insurance policy, an index universal life or variable universal life policy for one of your clients yet, I promise it's going to happen again, right? I said out of the 10 million, 6 million people bought the wrong type of insurance. So at some point in your career, you're going to run into this issue. Okay. And so specifically with our territory, with our team, this is the whole entire team that covers the country. For those of you that don't fall essentially in the state of Texas, New Mexico, or Louisiana, but because your RVP is in my territory, I cover you. So you feel free to contact whoever you want. Our map is on POL as well. So if you want to find your counterpart, please feel free to pull up the information on POL and you'll have access to your direct regional sales manager for your territory. But leading into our training, right? So we're going to talk specifically kind of what happens. I'm sure that some of you, at least one of you on this meeting tonight, has started hearing about either IULs or the infinite banking concept on social media, right? It's a huge trend right now. All of a sudden, everybody wants to work from home. Everybody wants to make that fast money, right? They want to teach their clients how they could potentially make fast money without even having an investment license, right? That's the first thing that we're going to kind of talk about tonight. But over the years, there's been industry trends that have kind of dictated what type of products have been sold, right? So obviously in the early 1900s, that's when whole life insurance was created. So that was the popular product. Well, in 1977, Primerica was founded, right? So we came in and we completely shifted gears in the life insurance industry. That's why these huge life insurance companies hated us, right? And so we shifted the gears a little bit and started introducing term insurance to the field or to the industry, right? Well, then over the years, as the actual market kind of fluctuated or whatever happened with the market directly impacted the type of products that were sold, right? So as you see in the 1980s, universal life, right? There's something with a cash component associated with it, but this cash component specifically is fixed, right? It's not necessarily anything that's tracking market performance. Well, then in the 1990s, as the market started going back up, they started introducing VULs, right? So variable universal life insurance policies. These policies specifically are tracking the performance of a mutual fund-like account, right? So they're letting clients participate in market gains and teaching them that that's a potential concept to allow them the opportunity for savings, right? So that kind of started happening in the 1990s as the market started going back up. And as you see, right, over the years, return of premium, just a new type of product that was introduced. But then in 2020, IULs. What happened in 2020? Well, we saw, number one, Primerica had their best year ever, right? I always want to focus on that. We had our best year ever in 2020, although our world pretty much came to a complete halt, right? Everything came to a stop. I literally remember going home, right? Because I wasn't a Primerican yet. I remember going home and thinking, okay, what they told us, take all your stuff home. We're not sure if you're going to come back tomorrow. Like we just had no idea. And we knew that there's a big, huge opportunity that we were going to be going into a bear market, right? That there wasn't necessarily going to be growth in the market, right? Everybody started getting scared. Okay, well, we can't go to work. We can't do this. The whole entire world is coming to a stop. There's going to be a market crash, right? That's kind of what we were expecting, especially for those of you that are securities licensed. You know that we've been in the longest bull market that we've ever been in before, right? And so when we hit 2020 and that happened, everyone got scared, right? Oh my gosh, let me pull my money. I'm sure for those of you that were around and had investment clients, your clients were calling you concerned. I remember I was the investment wholesaler, right? So I worked with my Primericans and I was the one getting the calls because they were getting calls from their clients. And so what happened was because of that industry trend, these companies decided, you know what, we're going to start marketing our product that works like a safe money alternative. It's not going to allow our clients to lose any money on their cash value, and it's going to give them the opportunity to participate in the market, right? Great. Okay. But these products do not participate in the market, right? And I'm going to talk you through how the growth actually works on an index. So that's the first thing you have to remember. They took this product and they started marketing the product to clients as a safe money alternative. They wanted to say, oh, look, well, if you put your money here, if you take the money that you have in your retirement account and put it into this IUL, we're going to make sure that it never loses value. And you're going to be able to take a loan out of this money and, all these wonderful things, right? Well, now all those clients are about 1 to 2 years into their product, right? And that's not necessarily the case. And a lot of these clients that they marketed to didn't even have the cash flow to make an investment. They just sold them on the investment. They're like, oh, well, I'll just buy it and I'll pay the monthly premium because I know what my opportunity is with the premium I'm paying every month, right? And I'll show you an example of a client that happened to, where the client purchased a $200,000 life insurance policy, an IUL, and he was under the impression that he was going to be able to take a $100,000 loan just 6 months into the policy, right? So I'm going to show you that policy and we're going to talk through where the client even thought, right? And he didn't even read his contract. He just believed the hypotheticals that person was explaining to him, right? And so this is kind of what's happened over the years in the industry that's related specifically to life insurance. Life insurance is going to be directly dependent on the market, right? It's all industry trends. It's all what's going on, how's the fluctuation working, and that's how interest rates work, right? That's how pricing works. Everything is dependent on the market and how our interest rate environment looks, right? And so specifically on an index universal life, it is built on the foundations of a universal life insurance policy. And for those of you that haven't heard, we're going to talk through what the fundamentals are. These fundamentals or foundations are cash value, right? And so there's going to be 2 different trains of thought that we're going to talk about tonight. And there's going to be different ways that you want to approach your client, right? One thing that I said is a lot of these clients that you're going to work with that are going to come across in your career, or even family members, friends, right, that already have cash value life insurance in place, you have to kind of learn how to approach them, right? Not every single one is your best friend where you can be like, oh no, this is trash, right? You got to buy what I have because this is better. Not every client's going to work that way. A lot of the time, the client's going to have a lot of pride, you guys, because they've been overpaying for premium on a policy where they were sold a concept, right? They weren't necessarily sold the correct solution. And so you have to figure out, right, different ways, different sales techniques, different approaches as you start working with your clients. And so one way that can potentially work is just talking to your client, right? Introducing the idea of life insurance and how there are 2 different trains of thought. And so number one, right, you can have a solution where you have the opportunity to buy term and invest the difference. So what does that mean? Well, you keep your death benefits completely separate from your savings, right? You keep it totally separate from the investments. You're not wrapping everything in one thing. The cost is going to be much lower and more beneficial and guaranteed as opposed to the other train of thought, right? So aside from keeping your death benefit and your investments separate, you have the complete control of your investments. You get to determine what your risk tolerance is and what the potential return is going to look like on your account, as opposed to just allowing the life insurance company to make that decision for you, right? And the thing that clients forget is that although in this other train of thought where you're tying everything together, you still have all those fees, especially if you have a variable universal life. You're paying those 12B1 fees that go into a mutual fund, right? They just don't know because they're not told until they receive their contract. And unless they read it, they don't really know that they're paying all these additional commissions for these products. And so the other idea is tying everything together, right? That's your cash value life insurance, whether it's universal, whether it's index, variable. This is a a solution that keeps everything in one wrapper. They sell it on the fact that the client has more flexibility and options inside of this wrapper, but everything is offered at a much higher fee, right? The income protection and the investment are completely dependent on each other, and they're in the same exact policy. So you're not in control of your investment, and you don't have access to both when it really counts, right? And the higher cost, the lower the coverage, right? We're going to talk through what an example of that looks like here in just a minute. But the way that you explain that to your client is you just simply tell them, look, there's two different trains of thought. Number one, you buy term and invest the difference. You have more control. You have access to both when it really counts, and you actually have two benefits, right? Whereas opposed to tying everything together in a universal life, you only have one benefit when you really need it. There's an opportunity for loans, but you have to repay your loans at about a 6 to 8% interest. So you're paying back 6 to 8% interest on your own money that you put into this contract. And if it's not money you put in, it's money that's been growing that takes about 4 to 5 years now to even grow, right? And so not only are they provided one benefit when they're paying a premium on both, they have the opportunity for loans with a 6 to 8% interest charge, and then the growth itself averages between 2 to 4%. And so you break it down for your client and you simply ask them, what's your goal? With your life insurance policy, what do you want to do? What do you want to happen? Well, if your client is someone who's thinking, right, they want to have something that provides their family the opportunity for generational wealth, and also provides them the opportunity to invest their money and have more money to protect themselves from living too long, they're probably going to say, well, I'd rather buy term and invest the difference, right? But in this matter, you've introduced a solution to them, as opposed to telling them, well, what you have, this 120-page document, is wrong, right? Because you may shut them down. They may say, no, like, I've been paying $200 a month for this policy for 5 years. Like, it's not wrong. They told me it was going to work. Right? Sometimes they shut down because they don't necessarily know what their other options are, right? So from there, you guys, it's more so introducing your client into understanding how this coverage works, right? And so again, we're going to focus on the drawbacks, and we're going to talk about certain things that are implemented in this contract. So insurance with a coverage to age 95 or 100, wrapped in a contract with a savings component, right? This is the way that these policies are structured. The insurance company decides the rate of return. So whole life or cash value, $0 in savings or cash accumulation. It used to be in 1 to 4 years. Now it's 4 to 5 years. Since the contract that I have from 2021, it did not have any cash accumulation for the first 10 years. Okay, I'm going to show you that here in just a minute. But 4 to 5 years, lower rate of return at 2 to 4%. We talked about that. Borrowing their own money at 6 to 8% interest, and the client must choose between the death benefit or the cash accumulation when it really counts. Universal life keeps this same cash value treatment as whole life insurance. So the changes on what type of insurance the client can receive. So the main thing you have to focus on when talking about the type of insurance that the client can receive, when they come to you and they tell you that they have cash value or whole life or universal life, you're under the impression that they have a product that they have been told is going to be in force for the rest of their life, right? They think, okay, this is my premium. This is how much they told me that I have to pay in order to pay my policy for the rest of my life. The price is never going to go up. I'm never going to have to requalify for coverage again. We know that is not true. Number one, they have the cost of insurance, and that affects directly how their contract is set up. And you're going to see it here on the next screen. They trap them into thinking that these products are more flexible because they use these premium options or death benefit options as options, right? They use them as flexible options or flexible benefits. And then the return rate is specifically based on the insurance company. They determine either what your rate cap, your participation, or your fixed rate is going to be that you're going to earn on your account. And so these are the two components of a universal or an indexed universal life insurance policy. So this is a universal life. Okay, we're going to implement the indexed universal down in a few couple of pages, but On a universal life contract, it's going to be composed of either an ART, which is an annual renewable term, which is a bad word here at Primerica, right? Because we provide term insurance. Annual renewable terms kick in as an option if our clients aren't eligible for any other end of term conversions, right? But ARTs are a bad word because what that means is every single year, based on the cost of insurance, your premium is going to be different. That's what an ART is. It's an annual renewable term. They either have that as their insurance component or they have a straight term, 20, 30 or so years, depending on what that company specifically offers. Aside from that, they have either a level premium or a death benefit that's called increasing death benefit or a level death benefit. So this is the insurance component of a universal life contract. The cash portion of it is going to be dependent on either if that company has set an interest rate or, like we're going to see in a couple pages, dependent on the index account that they're tracking for growth, right? But we're going to focus on specifically one of those flexible options first, and that's the death benefit. This is why we say that when you have this product, although you have a solution that is supposed to provide you life insurance and the opportunity for cash savings in a cash accumulation account, if the licensed representative does not explain to their client the way that the death benefit works, 90% of the time, the client's going to have the wrong death benefit. And why do I say the wrong death benefit? Because the only reason that your client should be paying this much in premium is because of the fact that they're looking at that cash component. They're relying on this cash component growing. Other than that, it's life insurance. Other than that, there's no difference in our product and the product that they're offering, right? Unless, of course, they're in an ART. Then there's a huge difference because their price is not even going to keep up with the cost of insurance. But we'll talk about that here in a second. So if the client, if they bring you a contract, right? They come and they bring you their contract and they put it down. The first thing you're going to look at, it sounds so silly, but it's going to be the amount of coverage that they have. First, let's look at the amount of coverage that you have. I guarantee you that client is going to tell you a different amount that's on that policy because the client is told by their sales representative the hypothetical value, assuming there's cash value growth on that account, right? So they're going to say, oh, well, it says 200,000, but they said it's 300,000 total, like, you know, when I die or after age 70 or whatever it is that their hypothetical said. That's going to happen a majority of the time. It happens almost every single time that I do an IUL breakdown. So number one, we want to look at the coverage amount that client has. Number two, we're going to look at the death benefit. So when that client brings you that contract and you look at the contract page where you see their name, I'm going to show you one here in just a minute. I'm going to say this again, right? But this is more because I want you to know where to find the information. There's only like 4 things that you need to be able to point out to your client without having to read through the whole contract. And so if they have option A, this is any IUL, UL, VUL, they're going to have a death benefit that remains level. What does that mean? That means that their death benefit is going to be simply what they have been paying a premium for, whatever is in that cash accumulation account, whether they used their money from their 401k, or if they let that money accumulate over time, it's not going to be paid out to the beneficiary. So what happens? Well, the client dies. If they have option A, all the beneficiary is going to receive is $200,000. Whatever was in that cash value goes to the insurance company. It doesn't go to an estate account. It doesn't go to the state. It goes to the insurance company. And a majority of the time, and I can tell you because I used to work at that large insurance firm, right? A lot of the time, the sales reps may not even know this. So they don't point this out to their client. They're just like, oh, well, you can buy this product. It'll give you a discount here, right? Let's go ahead and bundle everything. We'll give you a product for $20 a month. You got $100,000 in coverage. And they have no idea what they're paying for, right? That's how a lot of these companies sell these products. But the difference here is that the premium is so high and they're not able to break down, okay, this is the premium. If you want us to pay your beneficiary the cash value that you do accumulate, or this is the premium if you decide to opt out of that option. They don't explain it that way, right? They don't explain it that way. They say, oh, okay, we're going to go ahead and quote you. And these are the, and I kid you not, you guys, a majority of the time, the client's going to have option A on their contract. And that's the first thing you can point out. Hey, did you know that on this contract, you have option A, which means that if you die, your beneficiary, all they're going to receive is your death benefit. That cash value that you're so sold on, that you're focusing on, that you're relying on, is not going to go to your beneficiary, right? That only benefits you when you're alive, if you want to pay interest on it, right? So you want to make sure that you explain that to your client. If they have option B or an increasing death benefit, then they're paying an additional premium to have that option, right? And so that means that the death benefit includes the annual increase in that cash value account, right? So we understand now the first thing we want to review when we're looking at a contract is the amount of coverage that they have. And the second thing that we want to review is the death benefit option, because these are the benefits that they explain as flexible benefits. When they talk about flexibility, they're specifically talking about the death benefit and the actual premium that these clients are paying, right? But let's go ahead and go on to the next page. So this is a sample of a contract. I think this one was, I think it was North, I don't remember the name of the company anymore, but this is like an actual screenshot of one of the companies that we were sent a policy for. And so as you see, it'll say on their contract, right? What death benefit option do they have? Everything is worded out in their contract, literally. And I'm going to show you, I'm not going to focus too much on these screens because I want to show you like the policy that I have, the one from 2021, not that I own, but that a client sent to my REP. So we can actually review one that you guys are going to be running into in the industry, right? But it literally states on the policy specifically what their benefits are, what the client has selected. So you can tell the client and then you can point them to where the information is. And if the client, again, doesn't believe you, because pride is a real thing, they can call the company and they will tell them, they will reassure them, okay, well, the death benefit option that you have is simply going to pay out the beneficiary, you know, whatever the benefit is, cash value will not be paid out to the client or to the beneficiary, right? Unless the client takes a loan out while they're alive or surrenders their policy, right? Which most of these companies, this isn't even on my training, but most of these companies have a 15-year surrender. So that means that they will take a percentage of whatever their cash value has grown to, right? We know it's going to take anywhere between 5 to 10 years to even accumulate anything unless they make an investment, right? They're going to have essentially nothing in their cash value. But if they want to surrender it, then there's going to be fees on top of that to take the money out of their account, right? And so as you see here, this is just an example. Let me see if it says the name on here. Nope, they completely blanked out the name. You see how we blanked out the name right there? So this is a sample of a client that's 34 years old, standard non-tobacco. Death benefit amount is $300,000. Death benefit option is A, right? That's the level death benefit. Initial premium $307.11. Notice the names. Notice how everything is worded. Initial premium. Why is it the initial premium? Why is that not my premium? Why would the premium be different years from now? And so when you show this to your client, when they see it on their contract, they're going to be looking at the non-guaranteed values, right? They're going to be usually it's non-guaranteed values first, depending on the company and how their structure is on their contract. But this is the guaranteed. So you see in this example, this one shows cash accumulation after about 4 years. You know, in 4 years, the client paid about $4,676 in premium and accumulated about $1,700 towards that cash surrender value. Because they chose death benefit A, this is not their death benefit. We know that the death benefit, no matter what happens to this client because of the fact that they have option A, is going to be $300,000. Okay, so we're going to look at that here on a much greater scale. But remember, we're breaking down the components. So universal life has two components, your cash component, your insurance component, right? And so a basic universal life, this is where they changed. The cash component is what differentiates all these different contracts. A basic universal life, like I said before, is going to have a guaranteed interest rate that is set by the insurance company. What did I talk about at the beginning? Everything is interest rate environment. Everything is sensitive to what's going on in our interest rate environment and what's going on in the market. So basic UL specifically are using whatever rate the company has set that particular year. They can change it however often they have specifically set in their contracts. A variable universal life insurance policy, the cash component is going to be specifically sub-accounts. So it's going to be VULs are directly invested in mutual fund-like accounts, right? It allows the opportunity for clients to have full participation, but you must be securities licensed to sell this. So if someone has a VUL, that means that they were actually working with someone who is licensed to sell them or market that product, okay? But then you have an index universal life. This is the one we're focusing on tonight. This is the one that's been popular for the past couple of years. And remember, I said it's specifically because clients are sold that it's like a safe money alternative where there's not going to be any negative result based on the market. They're protected. They're not going to lose value, right? This is how they're getting clients to roll money over from their 401k into a life insurance policy. I mean, this just blows my mind. But these policies specifically are index tracking. Your client is not invested in the market. They are basically earning a percentage, right? So they're earning interest that's determined by that company because they set the rates, right? And then we're going to talk about what kind of rates they are. But the percentage of an index earning is applied to the account through the crediting strategy that that company offers. That sounds really confusing. I know, because I used to be on that side before I learned the annuity business. But basically what it means is that the client is earning interest based on the change in the index over a year, over 6 months, whatever the company has set as their crediting method towards their account, but it does not include any dividends. And they do not participate in market fluctuation. And what's one thing that we know? Most gains are going to come from dividends. That's why mutual funds are so different from tracking the performance of an index, right? Number two, the client has no control in the sense of market risk or risk tolerance because they are not invested in the market. And this person should not be giving financial advice if they are not securities licensed. That's the biggest thing. They are not to be giving clients any type of investment advice because they are not licensed to do so, right? And so this is the cash component of the product that we're focusing on tonight, right? So we understand now we've added index universal life to our scope of products that we're familiar with, right? You know what a universal life is composed of? This is the third part of your training. So you should know, right? What a universal life cash component looks like, right? Now you've added an additional product that utilizes essentially the opportunity that your client's going to earn enough interest. Okay, this is the mindset that I just don't understand. A client thinking, okay, I'm comfortable with this product because I know that it's going to protect me from any type of market loss. I'm not going to see any type of loss. I'm not participating in the market. You know, it's going to protect me. I'm going to pay an additional fee for it. But yet you're banking on this same product giving you how much growth, right? Like you're being so safe and you're not wanting to invest because you know that this is going to protect you from loss. But you're also combining this and thinking that this is going to be a savings account that's mixed in with your life insurance. It's just an unreal concept for me. It's just not something that is going to serve a middle market client who is looking to grow their investment account. I mean, it simply cannot do so. It cannot keep up. They have to have some sort of market exposure to be able to provide themselves the opportunity to invest for their future to protect them from living too long, right? And so the changes on the savings side, right? We know that it's growing based on the interest they can earn from the index account they're tracking. The money is not invested in the market. They're tracking the performance and earning interest. They're not invested. That's the most important thing because your client's going to say, oh yeah, I have an investment with my life insurance. If you have an IUL, you don't have an investment. You're tracking the interest. You're earning interest, right? The growth can be capped because the company sets the rate. It's a much higher cost, and every single living benefit is going to cost to use it. Even if they have a terminal illness benefit rider equivalent, they're going to call it something else. On the policy I'm going to show you right now, it's called accelerated death benefit. So they're going to call it something else, but they're going to charge $100 for the client to use it. So yeah, it doesn't cost you to have the rider, but it costs you to use it. And then when you use it, whatever you use is automatically deducted from the death benefit, which yes, ours works the same, but on top of that, it's the $100. And if they take a loan from this policy, right? Because they're sold on the fact that they can take a loan on their own money, right? Somehow they convince the clients to do that. But if the client takes a loan, even if they pay that money back, they're not going to increase their death benefit back up to what it was prior to taking that loan, even though they paid the loan back with 6 to 8% interest. So take that in, right? So you've got a policy, you've now taken a loan of your own money, if you have enough in your cash value account to do so, and you've waited whatever time limit they say, right? You've got to wait a year, you got to wait 5 years to take, whatever their specifications, because every company is totally different. They're going to take that loan, pay the loan back, and it's not going to be reapplied to their death benefit. So their beneficiary is going to receive, if you took out a $5,000 loan from a $200,000 policy, no matter what, even if you paid the $5,000 back, they're going to get $195,000, right? So all of that is in the contract. It is in the wording. It's just, it blows my mind, you guys. And that's why I get so passionate. But you have to remember the highlights, right? The cash value is not invested in the actual index. They don't participate in market returns. There are no dividends earnings, right? They don't earn anything from the dividends. And then the growth itself is dependent on the interest rates the companies set for the clients, right? And so the different crediting methods, again, as you get securities license, this is something you're going to become more familiar with, especially once you start broadening up and utilizing those annuity products that you guys have access to for your clients. That's when you're really going to learn about the participation rate and the cap and how that works. But don't focus too much on this part of my training tonight, because this is really confusing. It took me a really long time to understand it, but I just want you to get like a high level understanding of what it looks like, right? Or what it could be. But on the crediting strategies themselves, you're going to have mostly the 2 second options. So if a company sets a cap, that means that they're saying, okay, no matter what the change was in the index, right? Because we're tracking what the change was of that indice. No matter what the change was, we're going to set a rate cap of, let's see what they have on the next page as an example so you guys can see. So right here, you see this first one. So S&P 500 index annual point to point, they're participating 100% and their rate cap is 8.75%. Okay. So that means that no matter what the change is in that index over that 1 year period, if it's 10%, how much is the client going to earn if the company sets a rate cap of 8.75? 8.75. Right? They're not going to earn 10, they're going to earn 8.75. And that, for those of my securities license people on this call, is a high rate. That's giving them kudos, right? It's usually going to be anywhere between 4 to 6% for a rate cap, realistically speaking, and depending what's going on in the interest rate environment. And so this is how the rate cap works. The floor, if you ever see something regarding a floor, that is the minimum. So if the company says your floor is 1%, your floor is 0.5%, that means that is the minimum earnings that they're going to be credited upon that year contract anniversary, right? Or if they have a participation rate, we'll show it again on the other screen. If they have a participation rate, they're basically participating in a portion of that index change. This is the one that gets confusing, right? Because basically what they're saying is if they have a participation rate at, let's say 80%, right? So the participation rate is 80%, and we're going to use simple math. 10% was the change in the index, right? So what's 80% of 10? 8%. right? So the max they're going to earn is 8% because they're participating in an 80% par rate. Again, this part of the training is going to be like, whoop, it's going to go right over, right? Because you're not going to deal with this very often. And I don't want you to be the professional in this. I just want you to be able to be like, okay, well, you currently have a rate cap. So I would review that with the insurance company and see if you have other options, right? If they decide that they don't want to change their mind, that they want to continue paying $300 a month for a policy that's going to provide them only one benefit, fine. You can only do so much, right? You can't sign the application for the client, right? So being able to tell them, okay, great, but at least review this, make sure that you have the best rate that you can possibly have at this time. Make sure you review it every single year and update it according to what it is that you want to see happen on your account. Okay. And so I've given you guys, I'm going to not go further on this particular screen because I do want to show you the sample policy that I have. But just remember, guys, there's a few things you want to focus on. And if I have one volunteer brave enough to come on here with me, I'll do a quick interactive, right? I'm going to ask you 3-4 questions. If anybody wants to volunteer, if not, Nick, you can be voluntold.
Yeah, I'm ready. Talk to me.
Okay, so this is a sample policy, right? You've got your client sitting in front of you. What's the first thing that you're going to look at and review on this page with your client?
I'm going to look at their coverage amount, their face amount, which is 300,000.
300,000, right? So you're going to point them in the direction of their coverage amount. Number 2, what is the next thing that you're going to point out to your client on this particular screen?
Looking at the death benefit, which is option A, it's a level death benefit.
All right. And number 3, we haven't talked about yet, but you already see that it's highlighted and you may already know, right? What's the third thing that you want to point out to your client?
How much are they paying per month, or what are the total premiums or target premium or annual premiums at the target that they want them to pay, which is $36.85. That'll keep the policy in force. The minimum is $22.51. That'll probably keep it in force for maybe a year.
Okay, so everyone looking at these premiums right now, are you perplexed as to why there's 3 different premiums?
Right.
Like, why am I looking at a policy page and it doesn't specifically tell me how much? Can you imagine if we showed our clients, look, this is our term policy, 20 years, 150,000, you can pay this much, or this much. Which one do you want? What's your client going to say every time? Well, I want to pay the minimum premium. Well, why would I want to pay the guideline level? What does that even mean? Right? Do you think that they sit down and explain all 3 different premiums? Absolutely not. So this is the last thing that I want you to be able to point out to your clients. There are 3 different types of premiums available on these policies. The first one being that minimum premium, right? So if we select the minimum premium on a contract, that means that that's the amount that's needed to keep the policy in force for that current year. So if the client has either the minimum premium or the initial premium wording on their contract, that means that they have an ART. So they are currently in an annual renewable term. So their policy, they're not paying enough premium to keep their policy paid up. And I'm not going to show you the example here because I want to show you on the actual policy. But the second option is the target premium. That's how much premium is at least needed to pay on a policy in order to cover the cost of insurance to keep the policy from lapsing, right? To keep this as a whole life insurance policy. So you have to remember when you're pointing out these specific things to the client, you want to be able to explain that the minimum premium, the initial premium, however they word it. And if you're not sure, go into the contract and look for the verbiage. Google it. It'll be somewhere, right? If it says like mid-level premium, they always call it different things, right? Just make sure that you look it up. If you don't have the full contract, if all they sent you was this, they just want to show you their coverage and they just want to show you the death benefit, perfect. Look it up, right? Google it, Google the company, call me, right? Xochi, I'm not sure. They sent me this policy. I'm not really sure how to read it. Let Nick know, right? We'll come together, have an emergency team meeting, right? That way, what happens, you guys, is it's usually a specific area. These agents will populate a specific area and all of a sudden start hitting all these clients. So I'm sure, if you see one of your clients, Sean, that Roslyn, at some point, one of your clients is going to have one of these policies as well, right? So you want to be able to highlight a couple things, and the information is in the contract. So I'm going to go ahead and close out with this screen because this is usually close out in the sense of this training. And we're going to go into the contract real quick because I know we're coming up to time here, but Regarding overcoming those objections, one of the things that's going to come up is that the client's going to say, oh, well, again, it's helping me avoid taxes, my money's going tax deferred. The client is usually not securities licensed. They're usually not, licensed, period, right? They don't have a life insurance or a securities license. And so you want to be able to break it down for them. This benefit can be achieved through our investment options, just like a Roth IRA, an annuity, etc. Primerica reps who hold a securities license can provide you these options. These cash value returns in certain type of UL contracts grow tax deferred, but no matter what, when you are taking that money out of the account, you are going to pay taxes. There is no way to avoid that. And if you have option A and you don't take any of that money because you're avoiding paying taxes on it, well, guess what? The company is then going to keep 100% of those funds, and you never even saved any money on taxes, and your beneficiary didn't receive the funds either. Right? So you've got to be confident in explaining that to your client. And you don't have to yell at them like I'm yelling. I don't know why I yell. I just get so excited, right? But you don't have to yell at your client like, hey, no, I mean, sometimes you do, right? But you've got to get them to understand, like it is what it is. It's going to grow tax deferred. Yeah. So it's going to grow tax deferred in a Roth IRA and an annuity and a lot of other products that we offer as well. But don't focus just on that. And if you are focusing on that, make sure that you have the proper death benefit. It's all checks and balances, right? But with the self-banking or infinite banking, if you guys start hearing about that, we do have a training, and I know Nick and I have kind of touched bases that we may be coming on and talking about that as well. But we know this is a concept. This is not a product. The infinite banking is a concept of combining two different products where you are borrowing your own cash value to double dip on investments. This has major consequences for the client. And the idea of self-banking may appear right, or it may look good on a hypothetical, but the returns are going to be diminished by the policy and the loan fees. And if they hit the modified endowment, I mean, there's so many things on the infinite banking concept that are just detrimental to a client's portfolio. And so again, I know we focus on teaching you guys, it's all so bad, but really you guys, some of these videos, these trainings are just laughable because you see how much money the agent is telling the client to put into these policies and how much they're getting in return. And it is a joke. I mean, we'll watch it. I mean, there's going to be a whole training series on that and you'll be able to see it. The only thing is that they're using social media as a platform, right? We know Waka Flocka Flame or whatever his name is. He was at convention with Primerica because he went on and did a self-banking or infinite banking video when he did an investment in infinite banking, and he lost millions of dollars. Now he has life insurance with Primerica. So he went to the convention and recently did a whole new video talking about how the infinite banking concept is trash, right? And I hate to say it on a recorded video, but it is what it is, right? He went on there and he specifically spoke to that concept and was side by side with the people that provided him the solution, right? And so I hope you guys are able to understand more so how to approach your clients and how to have these conversations. And it's always going to be different, right? It's more so being confident. Don't be afraid to dive into it. If you're not 100% sure, like I said, about something on that contract, ask for time. Be like, you know what? I'm very familiar with these products and how they work, but I would love the opportunity to touch bases with my RVP, with my regional vice president, or somebody who's securities licensed, just to make sure that I point out everything that you're concerned about on your contract. So I'll come back, right? If you don't close that night at the KT, it's fine. Every time that I do my how to sell life insurance training, I focus specifically on you want to make some sort of close, whether it's a commitment for another appointment or it's a KT. I mean, it's premium, right? Whatever it is, it's a commitment from the client. And so I'm going to show you one more thing on the actual sample policy. As I pull it up, I'll go ahead and open up for questions. I know I've got some questions in the chat, but I'll look at them right now when I'm done, when I find the policy. So go ahead and unmute yourself if you have a question, comment, concern, and we'll go ahead and get started with that because I know we're a little bit over on time. We're right at almost 8, so
No,
I'll go ahead and open up for questions.
Xochi, you're doing a fantastic job, and I'm telling you, this has been a masterclass tonight on just the components of and the history trash value life insurance. You know, have this stuff goes back all the way to the early 1900s. And so if you don't mind, just go ahead and dive into this sample, because this is the stuff that we really get excited about when you see an actual policy. So go ahead and go forward with it.
Perfect. Okay, so this is a sample. Let me see if I can, no, it's not, let me close this out. So this is a sample of a policy. Can you guys see it okay? I know the words, do they look okay on your side? Okay. So I'll zoom in when it gets to the important stuff, okay? But this is a sample of a PDR. So this is a PDR that was sent out to a client from United of Omaha Life Insurance Company. So this is one of our big competitors. This policy was issued in October 21st, 2021, okay? And again, I'm not gonna read every single page. That's not my job. I'm gonna skip over to the policy pages that are relevant. And you're gonna notice, if you sit down just one time and look at an IUL. Don't call me on your first one before you even open the email, okay? Open the email, read the policy, look at it, and you'll notice a lot of the pages are repetitive information. It's the same thing written again. It sounds ridiculous, but it is what it is. So the first thing I want to show you is the last page. 128 pages on this contract, okay? We're going to start with the last page and we're going to go back 128 pages, okay? Everybody ready? No, I'm just kidding. We're not going to go through 128 pages. I think Nick would kill me if we went through 128 pages, but I want to show you what it says on the 128th page. This is how much they're scheming, you guys. This is a real contract. Hold on, let me plug in my charger. I was charging my iPad, and so I unplugged my laptop, and it's about to die. Okay, so on this, you'll see the last 2 pages. Okay, so the client, so I'm going to back up a couple pages. So you see this page intentionally left blank. Now your client signs their PDR, right? They've already signed the PDR. This is the payment authorization form. This is where they're basically agreeing to pay every single month out of their bank account, right? Now we're going to skip another page that was left intentionally blank, and we're going to skip another page that was left intentionally blank. This is comedic. You get to the last page, scroll down to the bottom, right? It can't even be up here. It's at the bottom of the page. And it specifically says, if you allocate premiums to the index account, the policy values will be affected by the change in the financial market indices, right? So number one, interest rate environment, what I talked about before. This policy does not directly participate in any equity, bond, mutual fund, commodities, or other securities investments. This is not a participating policy. No dividends will be paid. This is on the last page, at the middle of the last page. They're telling the client, finally, this is a flexible premium adjustable life insurance policy with index linked interest crediting options. The client is not invested in the market. You are not participating, and no dividends are going to be paid out. That's where this information is stated. Page 128. Okay, so now we're going to go back up. I'm not going to put you guys to the torture of going through every page, but as you see, right, congratulations. Here's a copy of your policy. We're going to go down, scroll through. Please return the requested requirement listed. So we're not the only ones that do PDRs, right? I know not everybody has a friendly relationship with PDRs, but every single company that issues a life insurance policy has to have a PDR of some sort, right? Some sort of acknowledgement. So right here, it specifically tells them the initial premium that's due to keep this policy in force. This will pay the policy to December 1st, 2021 for that first monthly draft. Okay, great. Clients read through. Okay, this looks very similar to that first page. Okay, but we'll go through it again, right? Keep going. Okay, that looks very familiar to the second page. Why are we looking at it again? Okay, so far you've seen that it's the same information twice. Now we're going to go through. This is the actual contract information. Okay, we're going to scroll through. Now you get to the policy page. This client thought he had $300,000 in coverage. First thing my RVP said was, no, you have $200,000 in coverage. Here's your initial specified amount. That's why he was saying he had 300,000, because it says initial. Oh yeah, that's the initial. But once my cash value grows, I'm going to have 300,000. Okay, great. Perfect. Okay. So your annualized planned premium, that's another term, planned premium, instead of minimum premium, instead of initial premium, annualized planned premium is another word that they use for that minimum premium. Okay, so annualized planned premium. Okay, let's keep going, right? So far, so good. Here we see the different allocations, right? I've already introduced you guys to a couple terms you may not have been familiar with. So we know, okay, they have the participation rate. So what does that mean? Anybody want to be real brave right now? Okay, I'll be brave. Okay, Nick.
Hey, Xochi, real quick, can you increase the size of that? Because it
can, but it's not here. I'm gonna full screen.
Okay, I got you.
Maybe like this. Okay, does this look a little better?
Hold on, it's looking smaller on our screen. It might be my
Okay,
view.
okay. Control. No. Hold on, hold on.
All
I
right,
made
that
to
looks
move
good.
it. Oh, that looks good?
Yeah.
Hold on. Why? Let me try this. Oh yeah, that's gonna work better. Okay. Sorry, it's because my screen is huge and so it doesn't fit. Okay. So does this look a little better size-wise? Okay. Let me scroll back down because it went back up on me. Okay. So I've already introduced a couple of these terms, right? So you see that this client has three different participation methods. No, one. So this company has 4 different crediting options. That's it. They don't have any more than that. So the one that this client is 100% allocated in is the 1 year, 100% participation. And we see that the current interest rate is 5.84%. So if someone wants to be real brave, unmute yourself, I'm going to ask a question. If the client's index change was 10% and they're participating at 5.84%, how much did they earn towards their crediting for that particular year?
5.84%.
There you go. That's it. Thank you, Jackie. So that's it. So they earned, and that's 10%. That's a big change that's being applied to a crediting strategy, 10%. And because they set the rate at 5.84, the max that that client can earn in that particular year is 5.84. A realistic return averages between 2 to 4%. So what is 5.84% of 2%? Is that worth it? Probably not, right? Okay, so we're gonna keep going, okay? I focused a little bit longer than I should have. This is the sample of the policy screen. I'm gonna make it all fit real quick. Okay, so this is the guaranteed value screen. So this shows the policy year 1 through 10. Did I say 1 through 10? So years 1 through 10, this client had an annualized plan premium of $1677. By the time this contract had been enforced for 10 years, the client earned a whole $203 in their cash account. Okay, perfect. Now, guaranteed death benefit, because they have option A, $200,000, not even including $200, right? Now, what's even worse? Can anybody point something out to me? I'm going to kind of give you a hint that's even worse if anybody's familiar with an index account and how it looks. All right. So the importance of not paying an ART is avoiding avoiding your policy lapsing. Okay, it's 8 o'clock. I've made it this far in my day. Okay, avoiding your policy lapsing. Okay, so we're not even going to look at on this page. I'm gonna keep going. I'm gonna keep you guys on the tip of your toes here for just a few more minutes. Okay. We're going to keep going, and I'm going to send this to Nick. So Nick's going to have a copy of this. You can read through it and you know, understand it yourself if you want to. We're not going to do that tonight. We can do that in a training and just read through the whole thing if you want to. But this specifically, what I want to point you out to is, again, right here, we're looking at the same thing. Okay, now we've got strong, stable, secure. Okay, now you've got a table of contents. Okay, same information we already saw, age 42, standard on tobacco, 200,000, same thing, right? We already saw this. Okay, why are we reading this again? Keep going, keep going. Here we've got a couple of introductions into a few things regarding the living benefits that he has on this contract. And I want to show you the no lapse protection. The no lapse protection is one of those benefits that they'll try to point out to the clients. Always read through. I'm not going to read through this one because every company has specific guidelines on their no lapse protection that basically is supposed to protect the client from their policy canceling if they don't pay their premium. But you've got to read through every contract. They're all laughable. Reading through the loans, this is where I specifically said, if the client takes a loan, let me see where the wording is so you guys can find it. And arrears, unpaid policy loans, reduce the death benefit of the value. Okay, withdrawals are available after the first policy year and subject. Okay, so there's a couple things, right? So loan interest is payable in arrears. Unpaid policy loans, obviously, they're going to reduce the death benefit. That's obvious, right? If they don't pay back the loan, it's going to reduce the death benefit upon the death of the insured. If the client takes a withdrawal after the first policy year, because you have to wait 1 policy year to take a withdrawal, they're going to be charged $100. Withdrawals are taken from the surrender value, and they are permanently going to reduce your policy's death benefit. That's what I said earlier, right? every single contract is going to say something specific pertaining to what their guidelines are. And right here it says it. The amount of each partial withdrawal must be at least $100. Withdrawals are generally treated as non-taxable return of premiums paid. Okay, whatever. We're going to keep going, right? You've charged me $100 now on top of 6 to 8% to take a loan, but you're going to call it a withdrawal. And anytime I take a withdrawal, it's going to reduce my death benefit and it's never going to go back up. Okay, cool. We've learned a couple things. Keep going, keep going, keep going. We're going to wait till we get to the acceleration. That's the one that I was saying. There's no additional premium or cost of insurance for this rider. The accelerated death benefit, that's the terminal illness benefit rider for this company. So although there's no additional premium, there will be a $100 charge for each acceleration that's made, right? Do we charge our clients $100 to take their terminal illness benefit rider? Absolutely not, right? So there's every single company is going to have specific charges to everything that they have included on their contract. And so we're going to keep going because we're almost there. We're almost done. I want to show you 2 more things that are going to blow your mind, and we're almost there. I need to memorize what page it's on because that would just make more sense. All right, so here we have the actual page we want to see. And this is like a zoomed in page. Can everyone see it okay? Does it look pretty clear on your side? Okay. So right here, we've got, this is really what you need to see. You've got your clients, they're a male, you've got their age, standard non-tobacco, $200,000 worth of coverage, death benefit, level years 1 through 78. We've got your participation rate again. This is the midpoint, meaning if there's a little bit of fluctuation in the market, again, we said everything is sensitive to the interest rate environment, right? So if they change it, they can change it to 2.9, or worst case scenario, they can do 0 if they want, right? Because the company sets the rates. Now, scrolling down, we've got policy, end of policy year 5, 10, 20, 28. Why does it go 28? Why didn't they keep going in increments of 5 or increments of 10? Okay, let's keep going. Age 47, 52, 62, 70, outline premium, end of year value. Okay, all right, we're looking at guaranteed, midpoint. We're looking at non-guaranteed. No matter which option you're looking at here, does the death benefit change ever? It changes here on the guaranteed option. So what happened? Well, this client, because of the fact that they were paying the level premium, the minimum premium, the initial premium, what is it that they called it on here? I forgot what they called it specifically on this policy, but whatever premium that equivalent or equals the minimum premium, this policy would have only paid up until the client was 62 years old. This client bought this policy in 2021 at the age of 42. And in 20 years, this policy is no longer going to be active because he's paying the minimum premium. And so what happened at the end of year, we're going to scroll down. Here you see the subtotal that the client has paid in premium over a 10-year period, $16,777. Over to the right on the guaranteed side, you see, okay, we finally hit that 10-year mark. The client has a little bit of a cash surrender value. But then what happens? Okay, year 11, a little bit of growth, a little bit of growth, a little bit of growth. Then by year 15, the premium can exactly, Jackie, the premium can no longer keep up with the cost of insurance. And so guess what? Well, they're going to reduce the cash value by however much premium they need to make up that difference. And then once there's no longer any cash value left, your policy ceases and you no longer have coverage. So by the end of the 20 years, this client had paid $33,554. He's at the very young age of 62 years old. He no longer has life insurance. He has to go qualify somewhere else for it at the age of 62. And this company is going to send him a letter in the mail and say, thank you so much for your business. Your policy has lapsed. Congrats. This is a real policy. And the worst part about this one is this is an RVP that I work with here in Houston. She called me because she didn't know what to say because the client thought that he was going to take a $100,000 loan out of this policy. Where? Not even on the non-guaranteed, not even on the non-guaranteed best case scenario, which requires about 10 to 15 years of a high VIX in the market. So just imagine, we've been, what did I say at the beginning of this training? We've been in the longest bull run that we've ever been in ever in history. Do you think that we're going to continue on a bull run for the next 15, 20 years? Do you think that, Nick? Do you think that, Jackie? Probably not, right? And so this is just an example of a policy that a client was completely dependent on, and they're going to focus specifically on the non-guaranteed best case scenario 15-year VIX policy when the client has paid $67,000 in premium, allowing them the opportunity to have $109,000 of money that they can take a loan out, because if they reduce it or take a withdrawal, guess what? That death benefit is no longer $200,000, it's now $100,000. So you've paid $40,000 of premium for it. It makes absolutely no sense. It just makes absolutely no sense, you guys. And all this is on the contract. You're able to walk your clients through every single page, show them how much coverage they're going to have over a specific period of time, show them how much coverage their beneficiaries are actually going to receive. And that's all you need to do. You don't need to be the expert. You don't need to sit there and walk them through 128 pages. You've got to be able to point out what's important to them, right? Because you started the conversation understanding what they needed and what solution they were looking to have for their future and for their family's future outcome, right? So hopefully you guys learned something new from me tonight. I know I threw out a whole bunch of information. There's a lot of different things that you guys are going to see, you know, within your career here at Primerica. But just remember, right? It sounds so cheesy. I say it every single time. I hear it at every single Primerica event that I go to every single week, right? We always say you're in business for yourself, but you're never in business by yourself, right? So remember, there's a whole team here to support you guys. I'll open up for questions if we have time. But again, if you don't have a question now, if you think of something later, shoot me a text, shoot me an email, let your upline know, and we will get together and figure out, you know, how to get you the answer or set up a time to sit down and train a little further, right? Whatever it is that we need to do.
Man, Xochi, thank you so much for that. Oh, that was awesome. I'm telling you guys, this is the level of support and the level of expertise that we have at home office that is representing us, that's out here in the field, you know, foxhole buddies in this crusade to help families understand what they're being sold and how we can correct those injustices out in the field. It was just a lot of things you shared. I love the way that you built on, you know, like I say, the foundation of, you know, a whole life insurance and how it's just these different iterations and how like that's the chassis that it's built on. And then in each phase, it's like, okay, you had whole life. And then there was this universal life piece that came on top of that. You know, and it still used some of the whole life components, but they just put a spin on it. And then this index universal life stuff that's out there now and how that's trying to put another unique spin, but it's all the same crap. It's all trash. And so, and so yeah, it's all whack. It's all wrapped up in the same stuff. So I do want to give the RVPs an opportunity to make a comment and stuff like that, because we do have 3 regional vice presidents on here in the hierarchy, including in addition to Rahima and I. But I wanted to open it up to the regional vice presidents. They might have comments or questions, stuff like that. So I turn it over to Super J Hall of Fame, Justin, and his wife, Brittany Hall. If you guys don't mind, just go ahead and share with Xochi any comments that you might have, any questions.
Well, Xochi, thank you. That's all I wanted to say. I mean, for you to take time out of your schedule to pour into us, we learned so much tonight. And I say we because everybody else on here actually learned a whole bunch, right? I'm like, so for me, the 10 years before cash value accumulates, I've never seen a policy like that. You know, with this 2021 type stuff, I'm like blown away by that, you know, and the type of position that's actually putting families in, you know what I mean? And then, you know, taking the loan and then paying it back. And when you actually pay it back, it doesn't restore the face amount. I was like, oh my gosh. Like, how can people like ethically sell this type of stuff, right? Because the ethics aren't there, right? I mean, but again, Xochi, thank you so much. You know, Brittany and I, we're definitely gonna be in contact with you because we want to get some one-on-one stuff, you know, popping with you. I think that you are adding an incredible value to Primerica and to the regional vice presidents that you're serving. So thank you so much.
Thank you guys. Of course, that's what I'm here for. That's my job. So
Fantastic. All right, I'm going to kick it over to Regional Vice President Andrea Fowler, so she can comment or question as well. So, A-Town, you got it, sister.
Thank you so much. And I appreciate your flexibility today too. We actually had her on our calendar. And so I was like, man, we're going to do some combination stuff, right? Wonder Twins Power Activate. We don't like this anyway. And so I just want to thank you. That one slide that had the index universal life, and then in the middle, the universal life, and then the whole life / cash value, that one slide alone was so empowering as far as letting people know the 3 different types of insurance that are out here. Outside of term is not on the course, because that's the best. But anyway, but that slide quickly can summarize. If anybody on here was able to take a screenshot, I know we were.
Oh, I'll send it. I'll send it.
Yeah, that one slide. If you agents are out here, and myself included, save that one slide. Put that on your phone. Put it somewhere in so that you can grab it easily, because you're going to run into one of those 3 items out here in the field. So hats off again. Thank you so much. I appreciate it.
Thank you.
And I'll turn
flexible.
Yes, thank you. And I'll turn it back over to you, Nick.
Thank you.
Fantastic. All right, and then we got Regional Vice President Benicia Walker.
I know Benicia. What's up, girl?
How you doing?
I'm good. How are you?
I'm doing well. First of all, I want to thank you for coming out to this training tonight. It was needed, and especially when you talked about Waka Flocka, because I have gone on so many appointments where I'm like, oh my gosh, I have to hear about Waka Flocka and all the things he's actually done, and I'm like, oh my goodness. And so for the agents to actually hear he has a policy with Primerica, I'm like, yes. So that needs to like be out there. Seriously, we need to put that like on blast. But one thing I want to talk about as far as the IULs is that the surrender fees. A lot of people don't understand the importance of, like them being, the clients actually been locked in, and the surrender fees that they have that's involved with those type of policies. And so that's major. I've actually sat down with clients and looked at their policies and talked about that. And I'm like, that's important. And then them actually thinking that they're participating in the market, so these are things that new agents kind of need to know. What's your best advice to new agents as far as learning this information? I mean, us as RVPs, we can kind of talk about this to them, but them like understanding this, because you have to believe in the product that we do as Buy Term Invest the Difference, to be able to get out here and defend our product, the crusade of Primerica. So what is your best advice as far as when you're sitting down and they're sitting down without their RVP and talking to a client and just really not understanding like the how to overcome the objection of coming across a IUL? Because that happened to me early on, with the best friend of mine. And I was able to fight this with Nick. And I guess because it happened so early, that is like stuck in me, but just anything that you want to say.
Real quick.
Yeah, real quick, probably Nick was that 2nd month license. I'm like, woo, so but just any advice you have to them.
Yeah, absolutely. Sorry, I was looking to see if I had the surrender schedule on here for that sample policy, but I can't find it. So I'll look for it oh, here it goes. Okay, yeah, I found it. But I'll show it here in just a second too, so you guys can see. But my best advice, until you learn the information and you see the examples and you start actually seeing our product in effect, right? And you start hearing those success stories and things like that, it's the confidence. It's being able to, if they bring it up, they're going to bring it up, especially if it's your best friend, right? Especially if it's somebody who is in your warm or hot market. They're gonna be like, oh no, I have this. I've been paying on it for 3, 5, 10 years, $250, $300 a month. And this is what I have. And this is what I'm sticking to. My best friend, my cousin sold it to me. Why would I not want to do anything? Why would I do anything else? Right. It's having the confidence, you guys. If anything, being successful in our industry is being knowledgeable, being confident, and being credible. Those are the 3 main things that I can advise you in this career, is having as much information and know as much as you possibly can about your product, dive into it. You paid an IBA to be here, right? You took the time to like study for your licenses, go out there and take an exam. This may have been the first exam you took since high school, right? So you want to go out there and study, learn the product and the opportunity. It's all the crusade, right? It's what can we do by teaching our clients to buy term and invest the difference? What's the purpose of it? It's saving middle market or Main Street families from junk like this. That's why you're doing this. You're going to get the opportunity at some point to get a policy and just have the confidence to grab it. Don't be afraid, right? Don't let the client intimidate you because they have a 120-page document that they want you to review. Just grab the document and sit down and ask them, okay, do you know how much coverage you have? How long have you been paying on this? Do you know what type of, right? I gave you the questions that you need to ask. Even if you don't know anything about this policy, if you sit there and you ask them the questions confidently, they're not going to know the answer a majority of the time. And so you're going to stump them and they're going to be like, well, I don't know. You have the policy right there. Okay, well, you've been paying on 5-10 years. So how much coverage do you have? Oh, well, I have like 350,000. Okay. And then what's your premium? How long do you have this policy for? How long are they guaranteeing that you have this whole life insurance policy for? Those are the things as you start getting more experience, it's going to take experience. Benicia, you got lucky. It happened the first week or within the first 2 weeks, but all it takes is confidence, know your product, or at least know why you're here. I came to Primerica as an annuity professional. I was an annuity wholesaler, not a life insurance wholesaler anymore, right? I wasn't 100% invested in this particular market. And I had to transition, and no matter what, I knew what Primerica stood for, and I don't care. I don't care what anybody says. I know that we have the best term insurance solution because of our field and because we do what's right. And that's why I was so passionate and made the transition to work with this company. And so use that, use your knowledge, use your crusade, use your belief, and use your credibility to your advantage, you guys. That's it, right? I have people who call me still because they're looking for insurance. And I've been on this side of the business now for at least 10 years, almost like 9 years, right? And they still call me, hey, Xochi, I need auto insurance. I need home insurance, because I was that 19-year-old that acted like I knew what it was to own a $500,000 home and how much coverage you needed to have because I was confident, right? So keep that. It'll provide you as much credibility and referrals and business and success. That's the biggest piece of advice I can give, is just use your confidence. Even if you don't know the name of the company, you're like, I've never heard of this company before. Ask your client, be like, let me see the policy. There's a few things I'm going to ask you. How much coverage do you have? Okay, they probably don't know. And if they do, great. How much premium are you paying? Okay, which death benefit option do you have? Okay, who are your beneficiaries? Do you know who your primary and your contingent are? And if they don't know, they weren't sold the policy the right way, right? So that's your opportunity to dive in and change up the solution, or at least allow them the opportunity to put themselves in a much better financial situation. So there's a lot more that I could say, but
man, that's so good. That is so good. And let me say this, is that, it's one of those things to where, we want to give you guys the level of support and the level of access to us. When you're out there in the field, you don't want to have to feel that you got to go at it alone. So, you're going to have somebody that's your field trainer that's with you, that's there to break down some of these things. We've been around the block a time or two. So, you can borrow our confidence as well. Even if you're the one that's leading that process, if you need our support, you can always tag us in and we'll jump in and we'll help out, with that. And, but I do know that there's going to be some point to where you do transition, for the people that's on this call, as you grow and as you develop and as your confidence does emerge, that you'll become more and more independent. There'll be some things. And let me tell you something, a lot of times you all have more credibility and more trust built up and more rapport built up with clients than what you think. Sometimes clients will actually let you take their policy. If you say, hey, look, can I get a hold of your policy? Can you send me a copy of it? I think that might be some things in there that I want to evaluate. I just need to take a look at it a little bit more. If you can give me an opportunity to evaluate, I'm going to come back with it. You can do those things too. If it's something to where it's just too overwhelming, you're like, oh my gosh, they just handed me a textbook. And it's got all these words on there, man. And yeah, you like, hey, can I bring this back? They'll let you do it. Trust me, they will. They'll let you do it. And next, I I want to kick it over to my partner in life, my partner in business, Ms. Rahima Bracy. Any comments or questions that she may have, I want her to get a chance to speak on that as well. So, Rahim, if you don't mind.
I know you're like, he is not about to let another person talk on this call.
Yes, I got to.
It can't be. Y'all, I am like in and out. Y'all know I don't say a lot. Xochi, I really just want to say thank you. I think you reaffirmed so many things for us about this business. And you showed us how crazy these policies are. The minute there was 3 different premium types on the page, on the first page.
Hey, but you heard, hey, y'all, to point this out, y'all heard Nick, he probably didn't even know what he was saying. He's like, yeah, the initial premium and it was that confidence, right? That came through. And I know some of y'all were like, what premium for what? So absolutely.
But you just confirmed that we're out here doing the right thing. And really what it said to me was, especially as you were going through this, and especially, Benicia picks up on the surrender charge part, is that we got to get in front of this stuff. We got to get in front of it, because that people are going to lose a lot. If they start taking loans out, they start getting trapped in these contracts, they're going to lose a lot by getting into them. And so we really got to get in front of them and really save people, and using example policies like you provided us with, Xochi, using examples to help them avoid making these mistakes. So again, thank you. You guys, my internet is kind of shoddy too. So hopefully you heard me, everything I had to say. In this part of the house, the internet is terrible. But thank you so much. Great meeting you. I can't wait for us to be able to do more with you in the future.
Absolutely. And I'll show it just so you guys can see the surrender charge, just because Benicia did bring it up. But right here it says, I said 15 years, right? Surrender charges last for 14 policy years and are shown in the policy. Surrender value is the accumulation value less any applicable surrender charges. I'm not sure exactly what that means. So you'd have to read through this contract to see what they mean. But exactly to your point, you want to make sure you point these out to the client, because it's all worded in the contract. 14 years for a surrender charge. I mean, it's crazy, but thank you so much. And it is 100% reaffirmation, you guys. I'm sure you've heard this from your RVPs before, so thank you for opening your ears to me. And we all have the same, we're all on the same crusade, right? We know why we're here, especially your RVPs, with the experience that they have and the clients that they've helped save over the past however many years you guys have been in business, right? That's why they take these evening trainings, just to train you guys so you know exactly. I mean, this is just, if you don't see the difference in Primerica just in this alone, you guys, you're missing it, right? We take our evening to sit. I mean, I sit through training all day long, right? Because this is what I'm passionate in, is teaching you guys how to work through our products to make you successful, and in turn make your clients successful. So absolutely, I look forward to working with you guys a lot more in the future, and thank you for allowing me in and talking to your team. I appreciate it.
Fantastic. And if you guys don't mind, please come off mute.
No, thank you.
And give Xochi.
Thank you, Xochi.
Thank you, Xochi. Thank you so much.
Thank you so much.
Appreciate it. Greatly appreciate it.
Empowering.